Hello students, I hope you all are doing well at your home. Today we will discuss about development banks. In my previous video we had discussed about commercial banks. Development banks are known by various names like term lending institutions or development finance institution. The first development bank was IFCI, that is Industrial Finance Corporation of India. It was set up in 1949. Later on, World Bank prompted ICICI, that is Industrial Credit and Investment Corporation of India. Later on, in 1964, IDBI was set up as an apex body of all the development finance institutions. IDBI stands for Industrial Development Bank of India. Development banks are the specialized financial institution which perform twin role. First, they provide medium and long-term finance to the private entrepreneurs, businessmen, and second is performing various promotional roles conducive to the economic development. So here you have to keep these two things in your mind, that development bank provide medium and long-term finance, and second they perform promotional roles. They are development oriented banks and called kingpin in the process of development. They provide financial assistance in various forms like loans, underwriting, investment, and guarantee operations. Promotional activities like economic development and industrial development are the important activities. It generally supports capital intensive projects spread over long period, yielding low rates of return. They provide interest rate at very low, and these rates remain stable, means they do not change rapidly. So they provide loans at the comparatively lower rates, and these rates remain stable. Now we will discuss the difference between the development bank and the commercial bank. Development banks do not accept deposits from the public, whereas commercial banks accept deposits from the public. Development banks are specialized in medium and long-term finance, whereas commercial banks provide short-term, medium-term and long-term finance. Development banks not are the mere purveyors of the long-term finance but also plays promotional roles, whereas commercial banks are the mere purveyors of the finance. So these are the basic difference between development bank and the commercial banks. Now we will study how development bank give finance. Development bank give finance in 5 forms. First, direct subscription to the equity, underwriting, guarantee for the loans, guarantee for the deferred payment, and project finance in form of rupee loan and foreign currency loan. So in this way, development bank provide financing. Here is the structure of the development bank. It is of 3 types: industrial development bank, agriculture development bank, and export import development bank. Industrial bank are categorized on 2 bases, that is on the national level or on the state level. So all India level industrial bank include large scale and small scale bank, and second is the state level banks like SFC and SIDC. Next, agriculture development banks are again categorized in 3 levels: all India level, that is NABARD, state level SLDB, local level like PLDB. PLDB stand for primary land development banks. Third is export import development bank. It includes one bank called Exim Bank. Now the important features of the development bank. First, they are the specialized and the multi-purpose financial institution. They provide long and medium term finance. They do not accept deposits, so they are non-intermediaries. Intermediaries are those which stands between the lenders and the borrowers. They are development oriented banks. They promote economic development. They do not compete with the normal channel of finance. Their motive is to serve public interest. They come into existence because of the government efforts. Here are some objectives of the development banks. They are considered as the agent of development in the various sectors like agriculture, industrial, cottage industries, or in the export-import. They accelerate the growth of the economy, allocate the resources to the high priority areas. They help in fostering the rapid industrialization in the nation, higher production, more employment opportunities are created. They also help in the development of the entrepreneurial skills. Development of the rural areas can be done with the help of development banks. They help in financing the housing, small scale industries, infrastructure and social utilities also. The important functions of development banks are to promote the investment of the public and the private capital. They help in mobilizing the resources to the various sectors. They provide technical assistance. They also cooperate with the RBI, government and other organizations. They promote institutional infrastructure. They help to train the entrepreneurs on various issues. They undertake other activities to foster the economic growth of the nation. So these are the important functions of the development banks. Here are the names of development banks: IFCI, IDBI, IRBI, ICICI, SIDBI, NABARD, EXIM, SLDB, SFC, SLDC, SLDB. Here, these are the acronyms with the full form of the various development banks that works at different level, like at the national level, at the state level and at the local level. So this is the introduction of the development bank. There are different banks listed here. You can go through their history also and you will find more or less the functions and objectives of these development are related to the medium and long term finance providing to the various sectors and to play promotional role which is conducive to the economic development. I hope you all are able to understand the basic concept of the development banks. Thank you so much.